I wanted to do this session today because I've received some messages from new members and from people who want to become members, and they ask me about how to use the service, what's available to them, and when they join, what do they do? Where do they go? What should they look at? What's important to focus their attention on? How do they start? So it being very valid questions, I thought it would be a great idea to do a session going through the full mentorship option that is available. I have two options. One is the basic and one is the full mentorship option. The basic option is just for those that have some money that they want to invest. They need a little bit of guidance with their trading, something to help them with opening up their positions, using their techniques and their methods, and something to help guide them through the markets to help them hopefully become profitable and stay away from big drawdowns. So I have that option available to some, and for those that are interested in having a more rounded service, a more rounded form of education that will target all aspects of being a professional trader, I have the full mentorship option available. So as we trickle now into 4 p.m. and the attendees start to come into the room, let me bring up my screen. So I've made a post on the Twitter page. If you have any questions, please submit them there on the Magic Trader Forex Twitter, the public page. So if you have any questions, post them there. It's easier for me to go there and read what your questions are. Let's try to keep the questions to do with the full mentorship service. So if you have any questions on where to find information, how to use the information that's provided, please, that's where you can send me your questions. Okay? So when you sign up for the service, the first thing I'll send off to you is an email. And the email will give you some instructions on how to create your login identity. Okay, because as you will notice on the website right here, you can log in and you have access to all the information you'll need to follow along with the service. Okay, so the first thing you'll see is when you get the email, it'll tell you to come onto the website and create a login and password. Okay, and once you create that login and password, I'll get an information telling me that you are trying to create a user identity on the website. And then based on your membership option, in this case being the full mentorship option, I'll provide you access to 3, 4, 5 key spots. Okay, so let me just bring up my little tool right here. Okay. So you have the trading video library, okay? You have the Arujo report, you have the webinars, the Forex Market Outlook videos, and you also have the Magic Trader portfolio. So what are all these areas here? So the first one is the trading video library. That's where we keep all the lessons that you can go through to learn exactly how we're trading, okay? We're using supply and demand. We're looking at the COT reports. We're looking at institutions to see whether they're accumulating a position or offloading a position. And we're looking at drawing trend lines to see how price reacts to those trend lines and all sorts of things, okay? A whole video library here that is going to teach you everything you need to know to understand how the markets truly work, how the institutions move price from one area to another area, and how to find the institutional trade signals. Okay, so you click on there and you'll see a few buttons here. The first one being markets, institutional supply and demand, trends and trend lines, force of price, the commitment of traders report, and soon I'm going to be doing some video lessons on trade management, how I manage my trades. Okay, and so now's a really good time to become a member, because when you become a member now, you click on the markets, for instance, and you get all the video lessons that pertain to the markets, how the markets work, and so forth. Okay. And so what I'm going to be doing soon is I'm going to be breaking down all these video lessons into different levels, because when you take a look at all the video lessons that are offered, you may not notice, or you may notice that as you watch them and progress from the first one to the second one and third one, the material becomes a little bit more difficult and a little bit more advanced. Okay, and if you cannot master or understand the first video, going to the second one is only going to confuse you. So very soon what I'm going to be doing is I'm going to be structuring the education on 3 different levels. So you'll have level 1, 2, and 3. And each level you'll have to focus your attention on that level of education. Focus on level 1 videos to do with the markets, supply and demand, trend lines, and all those other options. Focus your attention on that. Become very good at that before you go to the next one. Okay? Because what tends to happen is, I mean, when everything is given to you at the same time, you tend to watch the first one, watch the second one, watch the third one, because you just want to see it all. You just want to see what information there is there. And what's going to happen is you're going to overwhelm yourself, and you're not going to have a full grasp on what it is that we do, how we do it, and you're not going to completely understand what I'm saying in each of the videos. So now's a good time to sign up, because you'll have full access to all the videos. Now, whether you use that for your benefit or not is up to you. Like I said, if you join, best thing to do is to focus on the first video. The first video in each section is the one that you should be focused on, because that's level 1 information. Okay, when you take a look at the markets, what to expect from Magic Trader Mentorship, that's the first video you should watch, so that you know what to expect from the service, right? When you're done with that, how the markets actually work. This is one of the most key videos right here, because to understand what it is that we do and how we trade and how we find the institutional trade signals, you first have to understand how the markets work, right? How the institutions fill in their orders, how they trick retail traders, how they trick retail traders into taking the opposite side of their orders. This is all about that, okay? How the price moves up and down, why it moves up and down, how the orders are filled in, and so forth, okay? So that's the key video that everybody should be watching. Okay, so when you go back to the video library, we also have institutional supply and demand, okay? So to understand what it is that we do and how we trade, you have to understand institutional supply and demand. And this is the first video right here, okay? And you can read the description right here. In this video, you will learn the basics of how to find the institutional supply and demand zones. You'll also discover how important it is to be very accurate with your analysis, and how you must update your charts every day to stay on top of what is happening. Okay? Now, this is a very new concept to a lot of traders who sign up, because most traders are used to what most retail traders are trading: support and resistance, and when price is coming down here and then consolidates to the right, and then all of a sudden it breaks up to the upside, a lot of retail traders buy, okay, like that, and then they have targets and they're expecting those targets to be reached, okay? And so this is how most traders are looking at charts. What we do here is price will come down, consolidate, and we wait for proof. We wait for proof that price is going to go up. We don't buy because of a breakout. I mean, that's what retail traders do. And that doesn't usually work out. If you're lucky, it'll work out, but we've come to realize that this doesn't work out, okay? This type of trading is not the ideal way to trade. What we do here is we wait for proof to be displayed to us from the institutions to show us that they are indeed filling in orders from here. Okay? Because what will typically happen, not every single time, but what will typically happen is once the institutions fill in their orders, price will move up, exhaust itself, come back down, and then this is where you want to get in. So this concept right here is one thing that you have to understand. And I know that many, not all, but many of the members are still not grasping this concept, because many times price will come down, consolidate, move up, and then there's a zone here, and I have an order to buy here and an order here as a stop loss. Okay, and price will come up here and then pause, and people will send me messages and say, are you still expecting price to drop? Okay, just that very sentence is an example of what I'm trying to get across here. If you truly understand what it is that we're doing here, you would never ask the question of whether or not I'm expecting price to drop here. Because just because I have an order to go long here with a stop loss here and price has rallied up here and paused, it does not mean that I am expecting price to drop. I don't have any expectations. Okay? What I know is that if, and that's a capital I and capital F, if price was to drop down here and come to here, I know with great certainty that is more likely than not, price will go upwards like this. That's what I do know. Do I know that when price is up here and pauses that it's going to drop? Am I expecting that? I'm not expecting that. I'm waiting for it to happen, but I'm not expecting it to happen because I can't know if that's going to happen. Okay, this is one of the biggest concepts you have to understand being a member of this trading community, because trading supply and demand is extremely different from regular retail trading. Okay, again, price leaves, it pauses. Am I expecting it to drop? I'm not expecting it to drop. If it does drop and get here, I am expecting it to go up. Okay, because I know for a fact they filled in orders right here. I know that for a fact. Do I know for a fact that price is going to drop? No, I don't. Because what causes price to drop is when the institutions, they stop filling in demand in the market. Okay? When they filled in demand down here, which caused price to rally up here, I could see that. But when price pauses like this, it's happening live, like right now. And unless I had a phone line with top traders from the world banks on the other side and the biggest institutions, and I'm asking them, hey, are you going to continue pushing the euro US dollar higher? And they tell me yes or no. I can't know if price is going to drop because it can do anything. It can go higher or it can go lower. I'm basing all my decisions on facts and on proof. Okay, on the telltale signs that the institutions leave behind when they move price throughout the markets. So if price pauses and moves higher, I wait for new signals to produce themselves. Okay, that's the very essence of what it is that we do here with supply and demand trading. So understanding these lessons are your most important lessons. Okay, and right now in this section, you have access to Institutional Supply and Demand Zones Part 1, Part 2, and how to draw institutional supply and demand zones. An advanced lesson here. This is big stuff here. Okay? Eventually this will be brought into level 2 education. And soon I'll be working on advanced classes, okay, that will go into more in-depth, deeper analysis of institutional supply and demand zones and how to draw out their zones exactly, because not all situations in the market are textbook situations, right? These videos here explain textbook situations, okay? But not every situation in the market is textbook. Many times they are complicated, and you will never understand how to draw supply and demand zones through those complicated markets unless you've done them hundreds of times like I have. I've done them, I've analyzed them, I've journaled them, and I've studied them. So I understand how to draw supply and demand zones in tough to read markets, and they are going to present themselves many times, and those are advanced lessons. Okay, but you can never understand how to draw supply and demand zones in very tricky scenarios if you don't understand the very essence of supply and demand zones. Okay, so these are key lessons to watch. Key lessons. So when you first become a member, the first things you should be doing are watching the first videos on each section. Okay, you have the let's wait for this to come up. You have the markets section. You have institutional supply and demand section. Okay, those are the first ones you should watch. And this comes in order. The markets is first, institutional supply and demand is second, trends and trend lines is third, the force of price is the fourth one, commitment of traders report is the fifth one, trade management is the sixth one. So I'm presenting all these videos to you in the order that I believe is the order that you must learn from. You first have to understand the markets. You have to understand institutional supply and demand next. Once you do those two things, you can understand a little bit more on trends and trend lines. Okay? So once you know what it is that we're doing, how the markets really work, how to find institutional supply and demand zones, then you need to understand how we use trend lines. Because in my opinion, there's only one way to use trend lines. Okay? And it's not to just draw trend lines and buy and sell every time price hits a trend line. To me, that is a fool's way of trading, okay? Because it can work 1, 2, 3 times or 4 times in a row, but this is not the proper way of trading. This is not going to be what's going to work for you in the long run, all right? Trend lines are a tool used by retail traders, but also used by institutional traders. Okay, that's the big insight that you have to gather from trend lines. Trend lines are a tool used by the institutions against retail traders. And we've gone through this over in the videos many times. When price is moving like this, and you have a trend line like that, okay, and price comes back up like this, retail traders are selling here because that's what all the textbooks teach. All right. And then what happens is when all the retail traders are selling, if the institutions want to accumulate a position to take it to the upside, when they're buying, what do they need? They need a big load of people to sell positions to them, right? The biggest institutions in the world, if they are all pretty much aligned with each other, understanding where in the big scheme of things price is going to go, okay, then who's going to be selling their positions to them? Who? Other retail banks? Sure, there's hedge funds and institutions out there that don't know what they're doing, and they are the competition to the biggest banks. But the biggest players, you know, if you take a look at the COT report and study it long enough, you'll see that they're all aligned with each other. So they need other players in the markets who are going to be selling the positions to them. And so that's why these trend lines and support and resistance exists, period. It's the only reason why it exists, okay? Some are very smart and they know how to use it to make the money, and great for them. Those are extremely dedicated traders that find a little niche in the market that allows them to use support and resistance and trend lines in their favor. But what you will learn through this service by watching these videos is how trend lines are actually used in the markets, okay? It's a very, very secretive thing, in my opinion, because I have yet to ever see any type of education in the markets today that really goes in depth to explain how the institutions are using trend lines against retail traders. And once you understand that, once you understand how the institutions are using trend lines, then you can use trend lines in your favor. And that's what we do here. We draw these trend lines, not to take trades off of them, but we draw them to see what the institutions are looking at and what the institutions are going to do with them. And when we see an institution obliterate a trend line that we know is being used by retail traders, then we know the likelihood of what is going to be done with price. later on. And so without understanding how the markets truly work and how to find supply and demand zones and why we are finding supply and demand zones, understanding this concept of how trend lines are really used will not make sense to you. Okay, so you first need to understand the markets, support and supply and demand, institutional supply and demand, and then once you understand that, you get into the art of the trend line. This here is the first key video, in my opinion, that you have to watch to understand how we use trend lines, how the institutions use trend lines, and how they use the trend lines against retail traders. Okay, once you can grasp that concept and let it really sink in, it'll take time. You'll have to do work on your charts and draw trend lines here and there and see for yourself. Because if you're not used to this type of understanding of the markets, it's going to be a concept that's going to just be like completely outside of your norm. All right. So it's going to take some time to build up the confidence to understand what's truly happening, and you have to see it for yourself. Seeing is believing. Once you draw enough trend lines and see what takes place with price, when price hits opposing zones and how trend lines are treated, you're going to realize that there is truly great wonder to understanding how trend lines are truly used in the markets. Okay? And so when you finish and focus your attention on this video only, and again, in the near future, when I restructure how the website presents the educational material to new members, their new members are only going to be given access to entry or level 1 education, like this video, and that's it. Level 1, okay? Because you cannot progress with this education unless you truly understand this. So so focus your attention on the first video of every section. If you're a member now, that's what you should be doing. If you become a member in the next week or two, this is what you should be focusing your attention on. Just the first video. Okay? Truly grasp it, work on it, spend months on it before you ever go into the next material. Because the next material, the next education here, the material that's in here, trends and trend lines, is more advanced. It's more advanced. You know, if you don't completely understand this here, this is not going to make sense to you. Okay? Because what is here helps us to find institutional trade signals. What is here helps us to understand what is really taking place in the markets. If you don't really understand what's taking place in the markets, how can you use what's taking place in the markets to help you plan and find institutional trade signals? The bottom line is you can't. And there's no fast forwarding from understanding this to understanding this. It just cannot happen. You cannot do it. You can't watch this video 2-3 times and say, I completely get it. Now I'm going to go into this one, and then think that you're going to completely get it. It's just not going to happen. You have to spend a lot of time on this before you can get to this. And how I know this to be a matter of fact is because, you know, when I it took a long time to understand this concept here, and I'm still working on my understanding of this concept. And then to understand what is in here took many years, many years to understand it. And it was all because of journaling and studying the markets and having a really good understanding of this that led me to understand this here. Okay, so so that's for trend lines. And now when we go back to the video library, we'll wait for this to load up. Here you go. The next concept is the force of price, and this one is a very advanced concept. Okay, what is taught here is not taught anywhere. I know that because I created the force of price. Okay, I created this concept. It exists in the market. Okay, these forces exist in the market. I witnessed it with my own eyes by analyzing the charts and seeing for myself that there were forces in play when price hit specific zones, trend lines, and specific areas, I saw that there was a force that came into the markets, and I saw and witnessed how these forces reacted from each other. Okay, and the most advanced concept to understand is how price reacts from one area, what it rebounds from, what causes it to go further down, what it reacts upwards from, and what causes it to eventually break through zones. I mean, this is the most advanced concept, and this is something that I'm continually working on every single day. I've been doing this for years, and I'm still working on understanding this concept. But what I have learned up until now, I share in these videos. Okay? So you have to understand how the markets work. You have to understand supply and demand, and finding institutional zones and how we find them, why they exist. You have to understand the use of trend lines, why we draw them the way that we do, and why and how the institutions use them against retail traders. Okay? Once you understand those concepts extremely well, only then should you ever watch this video here, The Force of Price. Okay? And in the description I've written, in this video you'll learn one of the most important things I have ever discovered about price and how it moves. The force of price is something that, if you are not aware of, will destroy you. But if you are aware of it and get on the right side of it, it will be your best friend. The force of price is something that you must understand to be able to become a consistently profitable trader. The force of price is what destroys traders without them realizing it. Because if you get into position and the force is not with you, it's not going to move. And it can easily shake you out and cause your stop loss to be taken out. You know, many times I get asked questions about, stop hunting, and does stop hunting actually happen? And are you worried about getting stop hunted? Because you have tight stop losses. You get into a position here and you have a stop loss here. Aren't you worried about price dropping to your stop loss and then reversing? And my question is no. I'm not concerned one little bit about stop hunting or about my stop being taken out, because what would cause your stop to ever be removed is you not understanding the force of price. Like, for instance, right now when you look at the markets, you see that we have a lot of consolidation taking place. So when consolidation is taking place, we know, those who study the material know that there aren't any forces in play. When there aren't any forces in play, stops can be taken out left, right, and center. But as members know, when there aren't any forces in play, I'm not opening up positions because of this reason. You can't take a position and base a stop loss off of a zone when zones typically will be removed during consolidation phases because there aren't any forces in play. But when forces are in play and there isn't consolidation happening, then you'll have price reacting to those areas of supply and demand, and you can put your stop loss below it and your entry above it, and those zones will work and you will not get your stop loss triggered. Why is that? Well, when you go through the course material, you're going to realize that it happens because we're riding on the coattails of the institutional traders, period. Okay? And so if the institutional traders have created a demand zone like this, where they are filling in orders to take price up here, if they fill in the orders and they come back down like this, and their intentions is to take price here, and we know that because we understand the forces of price, and we understand supply and demand from the institutions, and we understand how the markets actually work, and we understand why trend lines are important and why they are important to draw them the way that we do, then you'll know that this area will hold and no stop losses will be hunted and price will come up here. It's very, very simple. Okay? But understanding all of this and having a good grasp of it is not simple. The material that's provided here in this service is not something that you can watch and within 2-3 months be an expert at. It's not going to happen. Period. It's not going to happen. And so if you're not committed to watching these videos and studying these videos and really grasping the concepts and focusing your attention every single day on understanding the concepts and journaling them and letting them really sink in, if you're not spending your time doing that, then you're not going to grasp what's truly happening in the markets. And if you're looking to become a great professional trader with consistent results, you're not going to achieve that. Okay? You may find some system. Look, you have two options as far as I'm concerned when becoming a professional trader. Okay? Two options. Your first option is you can find a educational material that says, hey, we're going to teach this amazing system, and you can become a member, and within 3 months you're going to grasp the system and have a good understanding of how the system works, and then you can go into the markets and trade it and make money. Okay, so go ahead and do that. What will typically happen is you'll find that if you are lucky, and I say lucky because you are not fully grasping the concept of forces of price. You don't truly understand why trend lines are drawn the way that they're supposed to be, why institutional zones are important, why the force of price is important. If you don't grasp those concepts, then those systems might work for a short period of time, maybe a year, 2 years, 3 years. It happens. But eventually those forces are going to shift on you, and you're not going to realize what's taking place in the markets, and that system is not going to be giving you a heads up that things have shifted. Okay, that system is only a system. You're trading the numbers. You're hoping that eventually, over time, you're going to have more winners than losers. But eventually, when price hits massive areas of supply and a big move is expected to be taking place, you're going to be caught in bad trades going long, because going long here worked, and here and here and here and here and here worked throughout all the years, and the systems worked very, very well. But then massive forces come into play, which is going to push price down here, and you're not going to be ready for those. Okay, so it's like, if you just want to drive a car, great. There's lots of places where you can learn to drive a car, right? You hire an instructor, you go for a few times driving out here in the city, in the highway, in this, in that. They'll teach you how to change your oil, how to respond to traffic lights, pedestrians crossing the street, and all that stuff. But what happens when you're driving your car in the middle of a desert and all of a sudden it stops working? Are you going to get yourself out of that problem? Are you going to know enough about the vehicle to get you out? If you just want to be a driver, great. But you're only going to just be driving, a spectator, sometimes making money, sometimes not. You're not taking this serious. A professional driver learns how to be a mechanic. Okay? Professional driver understands how a car works, why it works, how to change oil, how to adjust, how to be aware of how to enhance the performance of the vehicle, how to spot troubles with your vehicle just by listening to a sound, and how to know what is about to happen with your vehicle. Hey, I hear that sound. Something's happening with the shocks. I feel it adjusting and moving them to the left as I'm driving on the highway. I need to adjust, do an alignment. Okay? But does it take a lot of time, extra time, to understand a car and how it truly works? Sure it does. But if you're in this for the long term and you want to be a professional trader, that's what you need to know. The mechanics behind the system. Okay? You need to really understand how the system works, because once you understand how the system works, then you can use it to your benefit, and you can trade in any market condition. From today to the next 5, 10, 15, 20, 25, 30 years from now, it'll be the exact same way. The markets work exactly the same way. Systems do not. They will fail. So the force of price is a very advanced concept, and I'd only recommend this video here being watched. Leave everything else alone. And again, in the future, when I restructure the educational material and who has access to it, first-time members will most likely not have access to any information regarding the force of price, except for the one video that I have made to right here, forces, momentum, and trends. This one here is important to understand because it helps any new members to understand the Arujo report, the report that I submit every single weekend regarding the majors and what forces are in play. Okay, because it's important to understand what forces are in play in the majors so that you know what opportunities should be presenting themselves on the cross pairs. Okay, so force of prices is that one there. Now we're going to switch back. The next option is the commitment of traders report right here. And this one is something that everybody wants to learn because it seems quite the obvious choice. You know, we get a report submitted to us submitted to the government every Tuesday and released to us every Friday that shows the positions of the institutions. Now it seems like a no-brainer. Oh, if the institutions are adding to their longs and taking off shorts, then obviously they want price to go higher. So I want to understand how to read that data so I can make money. Well, it's not that simple. It's not that simple. And the reason why most people cannot use the commitment of traders report in any way to make them profitable is because they're taking it too literally, period. You have to understand all the other concepts that we've just discussed in this webinar to even grasp what's taking place here. Because if you take it literally, you're going to lose money. But if you understand how the institutions move price, what supply and demand is, how they're using trend lines, what forces come into play, okay, then you can look at the COT data and combine that with your knowledge of everything else, and then you will understand how to extract the information from the COT data and you make it useful for your trading. Now that is the very essence of what I provide in the Arujo report, because I've been doing this for years and I've become somewhat capable of being able to read the data and extract the information that's important and provide a complete breakdown of what I am gathering from the data. Now, every week I learn something new. Okay, every week I learn something new. That's because I spend hours putting together this report. Okay, hours, and it takes me hours to put it together because I have the experience of understanding the markets and the trend lines and the zones and all that other stuff with me. If I did not have that experience, I wouldn't be able to even extract the information from the COT data that I do. So I use all of my experience, all of my knowledge, all of my journaling and note keeping that I've been taking over all the years that I've been doing this, and all the COT reports that I've analyzed and examined, and I use all that information that I have stored in my memory to take a look at the data and take a look at the current situation and use what I see combined with what I have seen many times before and paint a picture for members for you to have a better understanding of how it is, number one, how I read the data and extract the information, and number two, what you should be watching for in terms of what is more likely than not going to take place in the markets based on the information that's provided to us in the COT report. So this video here should be probably the last video you watch. After watching all the previous videos, it should most likely be the last video that you watch. Okay? So don't rush yourself when it comes to educating yourself because you're really not going to do yourself any favors. Now, I'm going to also be doing some video lessons on trade management. That will include position sizing, and also when you're in a position, how do you select your targets? Because based on understanding how the markets really work, institutional supply and demand, how trend lines are used, how the forces of price come into play, and looking at the COT data, then you know where price is more likely going to head towards. And if all of this is pointing in the direction that institutions are going to accumulate a long position here, and more likely than not, take it all the way up here. Why would you get into a long position here and close it here? You wouldn't want to do that. You'd want to get in here and close it here. Sure, you might take a bulletproof target here and, halfway up just to secure your position and allow you to reduce risk to add additional positions. But if you know that all of this information is going to point to this, then you want your targets here. And to take full advantage of opening up multiple positions, taking full advantage of the move that's expected based on understanding all of these concepts. So I haven't done any videos on trade management yet because it's more important to understand everything else before it, because without understanding that, you'll never understand how to manage your trade, what size positions you should be taking, how to select your targets, and so forth. And not just selecting targets, but eventually what we're going to be doing is, once we get into position here and we're targeting up here, once price gets up to certain areas, how do you know where to move your stop loss? Do you leave it there the whole time? No, you have to adjust it, because as price is making its way up to those areas, we're going to be also increasing our risk to the whole move. We're going to be adding to our positions, and we don't want to keep increasing our risk as we're adding to our positions. We want to be decreasing our risk. That's why we have bulletproof targets, and that's why we will be moving and shifting our stop losses accordingly. But when do we do that? If we move our stop losses too soon, price can come back down, test an area for the second time, and stop you out before the bigger move happens. So there is a time to move your stop loss and a time not to. And all that will come eventually when you start to understand all these other concepts. And I will be sharing what I've come to learn on how to do that in this section in the months to come. Okay, I haven't done any videos yet because they aren't important to teach right now. Everybody needs to be focusing on this. And once we have enough members truly grasping these concepts, then I'll be releasing these video lessons. Okay, so let's get back to the member section. So that pretty much covers all the video lessons. All right, the levels of importance from the top to the bottom, and which videos you should be focusing your attention on. Now we have the Arujo report. So if you click on here, you'll see that we have all the reports being released on here. Okay, so you can click on this arrow, take you all the way down to the bottom to the latest reports. You click on the reports, and then you have the report there for you to read. Okay, and what you'll notice is each section has gold. Very bearish sentiment based on the positions of the institutions. The current standing of the positions of the institutions based on what they previously had in total size of shorts and longs to what they have now. We have an indication to tell us whether they are very strong, just bearish, or neutral, or bullish. It goes the other way, just like here, very strong, bullish sentiment for oil. Now, when we see this, does that mean, oh, we should just be buying oil blindly? No, it doesn't. When we see gold, very strong bearish sentiment, does that mean we just sell blindly? No, it doesn't. This is just an indication of what is the current situation in terms of the positions held by the institutions. The next section, the force of price, details what forces are in play based on what we see on the monthly, weekly, and daily chart. Okay? And when you follow this section, you're going to start to slowly understand how the forces work in the markets. Okay, so you'll be watching the video lessons. You'll be learning the material that's covered in those video lessons in terms of how the forces work, the trend lines, the institutional supply and demand zones. And then, as you are studying that material, you'll be opening up the Arujo reports, and you'll be reading what is currently happening in the markets. So now you can take the material in the videos and apply it to what's currently happening in the markets. Okay? And that's what I'm doing for you here. I'm breaking it down for you, saying this is what's currently happening on the monthly, weekly, and daily charts. These are the forces that are in play. This is the momentum. The momentum has paused. Now the momentum has shifted. And you're going to start to relate what you have learned in the video lessons to what is currently happening in the markets. And the beauty of this is that I release this every weekend. You read it, and then for the rest of the week, you can watch the live markets and see how the markets react based on what the forces are that are in play. Okay? So here, this is a great indicator right here. Forces monthly, momentum down has paused. On the weekly, the trend is down and the momentum down has paused. And on the daily, the momentum is up. Okay, so that's a quick way to just take a look at the information and see exactly what's taking place on each of those time frames just by looking at the keywords. All right, and then we have the overview. So the overview is me taking a look at the numbers of their long positions, their short positions, and explaining to you what's taking place here. Just because they're increasing longs doesn't mean we should go long. So I'm explaining to you, they're increasing longs, and this is most likely the reason why they're doing so. Oh, they're decreasing shorts, and this is the most likely reason why they're doing so. Okay, so when you watch the video lessons, and you watch the video lesson on the COT reports, and you read what's and you watch what's explained there, you can come to the report and read the overview, and now apply what was taught on the video lesson to what's really happening in the markets at this moment. Okay, so this is a step-by-step process that will help you to learn how to decipher the COT data for yourself and have a true understanding of how the markets work. Because the only true way to learn how the markets actually work is to apply lessons to real-life scenarios and see it over and over and over and over again. It's a process of repeating. I mean, how do you learn everything else? How did you learn how to ride a bike? By going on it a couple times? By watching a video on how to ride a bike and jumping on a bike and riding it? No. You watch a video on how to do it, and then you do it. And then if you want to rewatch the video, you can, and learn all the little tricks and tips and nuances about riding a bike. But you have to ride the bike. You have to get on the bike and ride it. And so this is the whole purpose of releasing this report every single weekend, is to use what's taught in the video lessons, combine it with what is being written about here in this report, and actually see for yourself on the charts what is taking place. How are the forces of price coming into play? Okay, why are they increasing their longs and increasing shorts at the same time? When you see these scenarios play out week after week after week, you start to build up confidence on this methodology of understanding the markets, and this is the confidence that you're going to need to eventually take trades for yourself based on your own analysis and be able to hold on to a position from down below to up high. Okay, even though it may take weeks or months to get up there, because you'll understand what's truly taking place on the charts. Okay, so this is one of the main reasons why this report exists, is to take what's being taught in the lessons and apply it to the real life scenario of the markets, and for you to follow along every single week. Okay, and now we go back here, and we go back to the members section. And the next area you're going to see is webinars and market review. So over the last many weeks, we've been doing webinars on pretty much every Sunday. And we've been focusing that time on providing lessons and material to everybody. But what there is going to be more of a focus of attention on is doing market reviews, okay? Because the week starts with the Arujo report, telling you what is taking place currently and what should likely take place in the week to come. And then as the week progresses, once the moves are made by the institutions, I come out with a Forex market outlook video. And I say, okay, these are the moves that the institutions have made. Let's go through all the charts to see if there's any institutional trade signals that have been produced by the moves that have been made by the institutions this week. And let's see if there's any trades available for us to take. And then I'll break it down. These trades are good. These cross pairs are good. This is why we should be looking for trades on these cross pairs and so forth. At the end of the week, we're going to do a webinar as a review of the markets. So we're going to review what was discussed in the COT report, what was discussed in the Arugel report, what was expected for that week, and then examine what actually took place. Okay? Because this is all part of your learning. You cannot become a professional trader and understand the markets unless you actually go through it, have something to read to understand what you should be watching for, let it play out, and then later on we get together and we discuss it. We discuss what happens. I mean, what happens in a seminar on understanding philosophy? The teacher will ask you, here's the book, you read the book, and then when you're done reading the book, you get together with the class and you discuss what you read. And you get opinions, and you talk openly about what was discussed so that you have a better understanding of what just took place. And so that is what we do. At the end of the week, we will do a market review and we'll discuss what took place in the markets. Okay? And so we'll click into that and you'll see that there's just a couple market review videos that we've done for the third quarter. And again, that's simply because we've been using most of the Sundays that we've been doing the webinars on providing you lessons, okay? But we're going to be doing a lot more market review videos in the weeks to come. Now again, the Forex Market Outlook videos, they typically come out on Thursdays. And why Thursdays is because the markets tend to work the exact same way every single week, okay? And that is Mondays we get a little bit of action, sometimes more than usual. Tuesday is the main day where we get a lot of action in the markets. Tuesdays, Wednesdays, Thursdays are the big days. And so by the time Thursday afternoon comes along, the biggest moves have already taken place in the markets. Okay, so we wait for those big moves to take place, and then after the moves have been taken place, I create a Forex Market Outlook video. So I basically take a look at the markets and I say, okay, these are the moves that took place in the markets, and based on the moves that were taking place, has there been any institutional trade signals that have been produced for us? And if there is, great. If there hasn't been any new signals, then I'll just take a look at, okay, let's look at the Aussie. Did price drop into a weekly demand zone? No? Okay, let's look at the pound. Did the pound drop into a weekly demand zone? Yes, it did. And is this a good quality weekly demand zone at a trend line, giving us the force of price to the upside? Yes, it is. Wow. So that means there's going to be a force in play right now that's going to make the pound stronger. So if we know that the pound is going to be stronger because of the force in play, pushing price to the upside, let's take a look at the pound pairs to see if there's any great opportunities that we should be looking for. If the pound's going to be strong, what's going to be weak? Oh, let's take a look at the Aussie chart. Oh, Aussie chart's going to be weak. Let's look at the Kiwi. Oh, there's no great demand zones. In fact, there's supply in control. So the force of price on the Kiwi is pushing down, making it weak, and the force of price is pushing the pound up, making it strong. Lo and behold, we have a good opportunity for the pound Kiwi. And what took place over the last couple of weeks? Pound Kiwi produced an institutional long signal. I sent it out to members and I put it in the portfolio, and we had our entries and our stop losses. And this week we saw great performance in the pound Kiwi, shooting up straight up into opposing supply. Target 1 hit, target 2 hit, the trade's looking great. So that's what we do with the Forex Market Outlook video. Okay, the Forex Market Outlook video just takes a look at what's happening in the market and what forces are in play, and if there's any trade signals that we should be focusing our attention on, or if there's any high probability charts that we should be waiting for signals to present themselves. Now, heading back to the members section. That pretty much covers it all, except for the Magic Trader portfolio. So Everything else is preparing you and creating a system for you, a process of how to analyze the charts, how to prepare yourself at the beginning of the week to know what to look for. And then as you're watching it unfold in the markets, I come out with a video to say, this is what took place. At the end of the video, at the end of the week, we do a review of what took place. And as all this is taking place, we have the Magic Trader portfolio being updated with new trade signals that are being produced by the institutions. And new trade signals that we're waiting for, trade signals that are open. You're going to learn about how I manage the trades, how I move my stop losses, where I place my targets, why I place my targets the way that I do. A full breakdown of each and every institutional trade signal. I'll also be putting in my theme trades in here, which is a more advanced style of trading that mimics the way that the institutions trade. And then you'll learn about how I manage those theme trades as well. But in here, you'll get a full breakdown. I mean, let's take a look right now at the pound kiwi trade. Here's the pound kiwi trade. So I posted this in the portfolio and I send out emails. I sent out emails to all the members. I said, here's the institutional trade signal. Okay. We have a demand zone right here. We have a institutional demand zone right here. They prove to us that they are filling in demand. All the forces are in play that will allow price to move higher. We're using the trend lines correctly. Okay, we understand how market dynamics work and where the institutions will most likely push price. And so now we know that this is an institutional demand zone right here, and this is where we want to be buying. We are expecting price. I put an order here to buy, a stop loss just below, a bulletproof target right here to reduce the risk of the trade, a secondary target here, and a third target right up here. And so I sent this out and I said, this is the trade that the portfolio is going to be taking. And this is the reason why I'm taking the trade. So a breakdown of all the time frames and what's taking place on each time frame in relation to trend lines, the forces of price, and all that other good stuff that you'll learn in the video lessons. Okay, the pros of the trade, the cons of the trade, you know, any disadvantages on the trade, I'll have a recommendation. Okay, so I'll say straight out, here's the con of this trade. Weekly supply is not clear enough to determine the type of supply that it is. So if that is of a concern for you, this is what you do. For a safer trade, wait for momentum to shift on the 4-hour chart. Management, I'll target 2-to-1, bulletproof. And the portfolio, which I placed $10,000 in to be able to track all the institutional trade signals that are taken in the portfolio, this is the amount of risk that I'm taking based on that account size. Okay. And so you'll see when the first target is taken, when the first target is hit, it reduces the risk of the trade to $0. At first, it was $63 risk, but once target 1 is hit, it's $0. Once target 2 is hit, if my stop loss was hit, I'd still make $114. But once all 3 targets are hit, I make $357, risking $63. Okay, on a 10K account. And that's with every trade being taken, reducing, exposing my portfolio to about 1% risk. Okay. Now, when you become extremely competent as a trader and you know what you're doing very, very well, you don't have to risk just 1%. You can risk 2. Okay. And then you can get better results. But that only comes in time. And so I show you what the risk is that the portfolio is taking. I give you the pros and the cons. I give you a what's the percent chance that this trade is going to work. In this case, I labeled it as 82% chance that this trade was going to work. Now that seems pretty high, and it is high. And the trades I like to take have to be in the 70s and higher percent chance of working out. And you're going to think to yourself, how in the world does this guy know what percent chance the trade is going to work? How does anybody know? If the markets are completely random, how would you know if it's got an 82% chance? Well, it's because the markets aren't random, and once you study the material, you'll come to realize that there are probabilities of things taking place based on current market situation. So in this case, it was about an 82% chance that this trade was going to work out. And as you can see, it definitely worked out. Here's the risk. The risk gets adjusted as the trade plays out. Here was the risk on September 11th. Here was the risk on September 24th. Here was the risk on September 25th. Okay? And then I journal every moment, every step of the way. On September 21st, the trade was triggered off of the zone. So I post that. So you can come and look at the journal and see when it was triggered, what day it was triggered. Okay? And if I'm adjusting stop losses, why am I adjusting stop losses? How am I reducing my risk on the trade right now? You can learn step by step and see how I apply all the lessons from all the videos to my live trades. Okay, step by step, everything's here, detailed. Okay. September 25th, the bulletproof target at 198.12 has been hit. Trade risk has now been reduced significantly, allowing additional trade signals on this pair to not expose the portfolio to a greater amount of risk. Okay. So everything is detailed in this portfolio. Okay. And so then we go back to the members area, and that pretty much covers all of the information that's provided to you as being a full mentorship member. And so that's how everything is structured. You can see that there's reason behind everything that I do. The video library is the first thing you should be focusing your attention on. Then you apply everything you learned from that video library to what's provided to you on the weekend in terms of the report, what to be watching for in the markets. And then midweek you have the Forex Market Outlook video that explains to you what just took place after the moves have happened. And then the webinars will review the market. The portfolio will show you where the institutional trade signals are. And then under here, general information, that's more for, this is where I'll be placing the video that I'm making today. Okay, you'll click here. Are you a basic member? Are you a full mentorship member? You click here, and then it'll open up and you'll be able to watch the video that we're doing right now from this webinar to explain how to better use this service. Okay, ladies and gents, and so that pretty much covers it all, and we fit perfectly in the hour that was allotted for this section. I hope it was helpful. I hope it explains what the service is, how it's structured, and how to properly use it to help you become a more well-rounded trader. Now, if there's any questions, I'll answer them now. If not, I'll let everybody get back to their thing, and I'll get back to finishing my COT report for members this evening. Everybody good? Thanks for the introduction, Kev. Lots of great information. Love the detail in the portfolio section. It sets out the trade. Yeah, thank you, Rob. Yes, the portfolio section is extremely important to me. So everything that I provide in this service, I want you to know that this is what I was doing before I ever had a service. All these things I was doing, this is part of my process that I go through to be able to put the odds in my favor of taking trades that are going to work out so I can make money from the markets. My portfolio, this portfolio, I was taking notes and doing this for myself before I even had the service to share. So the portfolio is great because you can learn a lot from it. Where the trade signals are, how they get triggered, why I move my stop losses. All this information is really, really important stuff. So cheers. Thanks, buddy. Thanks, Stephen. Have a great one. You mentioned journaling is very important. Would you be able to release any material or a document that will help improve my journaling skills? Yes, sir. I am working on that. So let me read that out loud. I'm not sure if I was mumbling here or speaking clearly. Somebody wrote to me. You mentioned that journaling is very important. Would you be able to release any material or a document that will help improve my journaling skills? Yes, sir. So there's two types of journaling that I do. One is the portfolio, okay, where I keep track of my trades, and I keep note of what's happening with my trades at each time, how I'm feeling, why am I adjusting my stop loss, should I move my targets, that sort of stuff. And the second part of trading, sorry, the other part of journaling is the day-to-day journaling that I do. I have a journal. It's a leather-bound journal that I keep notes in, and I just watch the markets every single day and see what's taking place, and I journal about it. This is what's happening with the euro. The euro's reacting like this. The euro's not doing anything. Gold is taking the lead now because it's hitting this area of supply. The force of price is this much, so it should be removing. It should be moving down like this and removing opposing zones. Then the next day, okay, it didn't move down. Why is it not moving down? Is it because these other charts are doing this? So journaling is something that you should do, but unless you know what to journal and what to write, there's no sense in journaling, right? So the most important things when you become a member is focusing on the video library, okay? And then focusing on the reviews to apply what you learned in the video library, okay? And to see for yourself how the lessons taught in the video library, how you can apply it in the market reviews, because you'll see it actually taking place. And we're going to review, and I'll point it out. Hey, did you see how price reacted from that area of demand? Did you see the force of price? The force of price was upwards. Then look how price reacted. It reacted, but look, then it stalled. Why did it stall from there? Because if you look at this other